Hey there, I'm Katie Fisher, owner and founder of Creative Balance, and today I'm going to talk to you guys about inventory. So this can get a little confusing, especially when it comes to like tracking inventory for our own purposes and then tracking inventory for tax purposes, because they're kind of two different things. So tracking inventory for our own purposes is just a general knowledge of what we have on hand. So say, for example, somebody wants to order 3 blue cardigans. We know that we have 3 in stock. And so that is tracking inventory for our own purposes so we know how many we have available to sell. But tracking inventory for tax purposes is a little bit different. It's a little bit the same, but a little bit different. So when it comes to tracking inventory for tax purposes, the only thing the IRS cares about is how much money or how much inventory value you have on hand at the beginning of the year and how much inventory value you have on hand at the end of the year. They don't care about anything in between, how many you sold or any of that. Okay, they only want to know what the value at the beginning of the year, what your inventory at the beginning of the year was, and what you still have on hand at the end of the year. Now, granted, it can be two completely separate things. It can be you sold all of your blue cardigans and now you have yellow cardigans, but the value of them is exactly the same. Or you sold all your blue cardigans, but now you only have yellow cardigans, but the yellow cardigans cost $5 less than the blue cardigans. That's all that they want to know. And the reason they want to know this is for the purposes of cost of goods sold. So how much should they take off your cost of goods sold? Okay, so what actually counts as inventory? So there's 3 parts when it comes to inventory, and I'm going to break those down because this is where it gets confusing. So there's raw materials, and this is anything that would go into producing your product. So say, for example, you crochet, and let me just use this as an example because this is a great example. So you crochet and sell your handmade items online, right? So this right here would be considered raw material. This right here, this lovely hat that I have not finished yet, but have halfway finished, would be projects in progress. Okay, and then finished goods. I don't think here. And then we have a finished good. Okay. So those are the 3 categories: raw materials, in progress, finished goods. Okay. So now how do we figure out the cost of the material? And actually, one thing that I want to share with you guys, in 2016, we were audited. And one of the things that I learned from that audit was that the IRS technically only wants you, they don't so much care about the products in progress unless the material can be easily calculated. So, for example, say that I had this project in progress, okay? When I write off the cost of this raw material, cost of goods, I would go ahead and take off the whole bulk of the roll because the IRS doesn't care about these scraps. Because how would I figure out the cost per unit? However, if say if I was selling beads and I could easily calculate the cost per unit, then they would want me to take off the cost, like how many beads they had sold, and then they would want me to calculate the cost of how many beads I have left. Okay, so if it can be easily calculated, then they want you to make sure you're including that in inventory. And if it cannot be easily calculated, for example, this sheen of yarn, then they would want you to include that just as general cost of goods sold. Okay. So that's where it kind of gets a little bit confusing. So what is easily calculated? What is not easily calculated? So if you can actually divide it by the unit, then they want you to deduct it by the unit, okay? But if it cannot easily be calculated by the unit, then they want you to deduct it as a whole. So they would want you to deduct this whole roll. If you use a little bit of it, they would want you to deduct the whole roll. Or if you have a whole roll left, you would deduct the whole roll, okay? So if it's easily calculated, you deduct it as cost of goods, or if it's easily calculated, then you count it as inventory. And if it's not easily calculated, then you would just deduct the entire thing as cost of goods sold. Okay, so raw materials, products in progress, and finished goods, anything that counts in those categories, what you have at the beginning of the year on hand, and then what you have at the end of that same year on hand, okay? So what is not inventory? So what is not inventory is things like scissors, paintbrushes, packaging, shipping materials, anything that does not actually go into the production of the product. So say, for example, I bought a bottle of glue. That would count as cost of goods sold, not as inventory. However, if I bought glue sticks where I could separate them by unit, that would count as inventory. Okay, so it gets a little bit confusing. And here's the thing, as a maker, do you have inventory on hand, or are you buying as you're making? That's the difference. So if you are buying as you're making, then more than likely you're not going to have inventory at the end of the year. You're only going to have scrap materials left, and you're not going to count those as inventory. However, if you are buying and storing inventory, then you will want to calculate your inventory at the end of the year, so you can make sure that you are deducting those cost of goods sold accordingly. So remember, we don't deduct our inventory as cost of goods sold until that item is sold. So if you have t-shirts that you've already made, they're hanging in your closet, or hanging displayed, ready to be sold, you would count them as inventory until they are sold, and then when they are sold, you will then deduct that as an expense or cost of goods sold. Okay, don't overcomplicate it, don't make it super confusing. The main thing here is to make sure that you are taking out the expenses as the product is sold. So like I said, if it can easily be separated by unit, it is important that you do that. However, if it cannot easily be separated by unit, then make sure you're deducting the entire thing as cost of goods sold. So the IRS, for example, what they told me was my vinyl, unless it was an unused roll, it did not count as inventory. And my sheens of yarn, unless it was an unused sheen, it did not count as inventory. They counted it as cost of goods sold. Okay, I hope this is helpful. I hope it helps you understand things a little bit better. And remember, if you're looking for a way to track your expenses, go check out the expense tracker for creative business owners.